Good morning, I'm with Nick Beecroft, the Chairman of Saxo Capital Markets UK. Happy New Year, Nick.
Happy New Year.
Recently, how the foreign exchange market seems to be going through one of its periodic paradigm shifts, characterised this time by a return to trading based on analysis and economic fundamentals rather than the rush for cover. Could you expand on that a little bit for us?
Yeah, I think the market's psychology was severely scarred by the events of 2007 and 8. Risk models were thrown into disarray. The black swan events we saw, including the Lehman's bankruptcy, the downgrading of senior mortgage-backed securities tranches, those things weren't predicted by the models. And we know the various institutions paid the price. So those events, that massive risk-off event has come to scar the market, coupled with the Eurozone crisis, which has rumbled on for 2 or 3 years. But I think, with fingers crossed and some hesitancy, I'm saying that we can move on from that and return to an analysis of the fundamentals, fundamental geopolitical macroeconomic developments that might move markets. Yeah, you can overlay that with technical analysis, sure, but without looking over our shoulders for a black swan event necessarily.
And you've also mentioned about the wishy-washy deal that was cut, and I'm getting fed up really of using these words, fiscal cliff.
Yeah.
But now it seems like debt ceiling is going to replace it as
Yes.
not black swan event, but the shadow that looms over everybody. At least we know it's coming, I suppose. And
Yes,
that's
we do.
some sort of we're prepared for it. Would you say? I mean,
I think you will.
Does it still have the potential to?
It has the potential, no doubt about it. But I think you will see some pullback in the so-called risky asset markets, the equity markets. They're pretty buoyant at the moment and started the year well. But I can see some pullback and fears arising as we get various sound bites about the negotiations that are continuing until the beginning of March. But I do have this underlying confidence that we will see a resolution. Turkey's over for Christmas. I think the Republicans realised that the population spoke in the elections in November and that the population in general wants a compromise and that the Republican Party is doomed unless it moves somewhat to the centre. And maybe the passing of the wishy-washy deal on the fiscal cliff a few days ago shows that there were a substantial number of Republicans who voted for tax rises, and that wouldn't have happened before. So I'm relatively confident, and much more confident than the market, I think.
And Obama's he's had a bit of a resurgence of confidence now as well. He gets sworn in again soon for a second term.
Yeah.
Although he loses his Treasury Secretary Timothy Geithner, I mean, will that have a negative effect, do you think, in the short term? I mean, he loses quite a staunch ally there, doesn't he?
He does, but I'm sure he'll pick another staunch ally.
Yes.
And the replacement is already being talked about. And I think Obama should feel confident for the reason that I mentioned, that the population has spoken, and he was certainly boosted by that vote on the fiscal cliff resolution a few days ago. He got his tax cuts, tax rises. He didn't have to agree to many spending cuts, really, although that will have to come.
So where do we see the dollar?
Well, I'm quite bullish, and I'm tempted to see a win-win situation, that I think the US economy will outperform certainly the Eurozone economy this year, certainly the British economy, and many other economies in the world, and surprise us to the upside, maybe plus 3% growth this year. And I see this as still a shadow hanging over the markets, the fiscal cliff and debt ceiling, but I think of the markets and real businesses, but I think it'll be pretty quickly behind us, and once it's resolved in the beginning of March, which I think it will do, then there'll be pent-up investment plans which are being held back, which will be implemented. And we know that corporate America is sitting on huge piles of cash, so it has the money to make those investments. So I think with a return to fundamental analysis for the FX markets, the dollar can do well in that case. Let's say we have one of our black swan events. Let's say the Eurozone crisis escapes its box and rears its ugly head again. Surprise Greece departure over a weekend on a voluntary basis, then the dollar would strengthen on that as well as a safe haven. So that's why I see a sort of win-win for the dollar.
And not so much a win-win for sterling.
No, probably to the authorities' dismay. I'm sure the government and the Bank of England would like nothing more than for sterling to weaken because of the boost that it would give to the economy. And I think you may see some jaw burning at least to try and make that happen. But there ain't a great deal else they can do, given that we don't have any form of foreign exchange policy per se.
Yes.
But I think they will be trying to get it down verbally if they can.
And talking about trying to keep the value of a currency down, we're looking at the yen and all of its shenanigans, as I keep referring to them. The Bank of Japan, having spent more years than I care to remember, trying to hit 1%,
Yes.
now decided that the best thing to do is to double that to 2%. You know, it's so simple. Why didn't anybody think of it before? So where's all that going to end up, especially with, in case of dollar yen?
Yeah, I think we have seen the sell on the rumour. We've come up from wherever it was, 81, let's say 6 weeks, 2 months ago, to above 89, 88 I think. And I always thought, I've been saying for a couple of weeks, that's enough on the rumour. We now need the fact to propel dollar yen beyond 90, for instance. The fact would be getting rid of the present BOJ governor, getting rid of his deputies, which can happen by April, and then implementing a change in the Bank of Japan law to allow them greater flexibility to ease. And I think Prime Minister Abe will try and do all of those things. But I suspect a lot of that is now in the market, and that the dollar yen may struggle beyond 90. And I don't see it beyond 90 in this quarter on a sustainable basis. Put it that way. If they do achieve all those things and vigorously implement QE, more QE, maybe even imaginative ideas like buying foreign-denominated bonds, although that'd be very controversial on the G20 stage, then you can see dollar yen power towards 100.
And whilst not a black swan event exactly, a lot of these schemes that the BOJ seem to be looking at, I mean, there is a point where yen debasement could be a serious potential. Do you know?
Yeah, there is a point at which the JGB market will roll over. Abe's already talking about more spending, more borrowing, etc. The JGB market relies on the fact that 95–96% of the issuance is bought by domestics. It's an old story, and we know that the streets of the West End are littered with hedge fund managers who try to short the bodies of hedge fund managers who try to short JGBs over the last 10–15 years. But that time approacheth. I think a couple of, and it's difficult to trade though. Still, it could take a couple of years. I can see US Treasury rates rising along with my bullish view on the US economy. We could be hitting towards 3% by the end of the year, I think, on 10 years. But that alone doesn't drag up JGBs. That's a domestic event. But demographics talk against JGBs, more pensioners drawing on a pension rather than making savings while they work. It will come sometime within the next 2 years, I think. And the other point to mention on the yen is that if I'm correct and we don't see black swan events, then you don't need the yen as a safe haven. It's been another safe haven.
Yes. And
it can become a funding currency again, especially if dollar rates look like they're rising. Indeed, if they do rise in treasuries.
Very interesting thought, actually, that. And staying in Asia, then China, things looking a bit more stable there with signs of growth, which is good news for the rest of the world looking in.
Exactly, figures coming through of an encouraging basis. The stock market's soaring over the last month or so. And I think that the China sees tension over the islands, etc., will be contained. I think there'll be diplomatic, if you like, saber rattling, but I'm 85–90% sure that it'll be maintained to that.
It's in nobody's interest, is it, on either side, to escalate that, really?
No, exactly.
Saber rattling, as you say.
Yeah, so I think one can be relatively confident that China can also play its part as a locomotive in the global economy's recovery, along with the US. So once again, that makes me relatively confident.
Do you think China does have that as part of its toolbox? It really wants to be part of the global economy.
Yeah, I think we'll see further small steps towards liberalisation of the renminbi as the year goes on. Maybe opening up of other offshore trading markets for the renminbi, as we've seen in Hong Kong and Taiwan. It's a gradual process, and it'll take maybe another 5 years for it to be fully convertible, but I think that'll continue.
Moving around the Pacific a bit, then we come to Australia and the Aussie dollar. Where do you see that sort of over the next few months?
Well, I think it can continue relatively strong. It has the interest rate differential in its favour still. If China seems to be maintaining plus 8% growth, that'll help the mining and extractive industries. So I think the Aussie can remain relatively strong, especially over the next 3 months, because this dollar strength idea, the US dollar strength idea that I have, is more beyond that for the course of the year. We could have some restraint in this quarter because of the fears over the fiscal cliff and the debt ceiling, actually it's only over the next 6-7 weeks. So during that period, I think the Aussie can do well against the dollar, but against the dollar for the rest of the year it may struggle, but can do well against other currencies like the yen and the euro, for instance.
And we're meeting at sort of the onset of the earnings season, which already looks as if it's quite, well, there's signs of optimism there. We've got an uptick in the demand for aluminium, it seems.
Yeah, Alcoa was encouraging. Yes, we shall see how the bulk of the other releases come in. And we're seeing pragmatic moves also in the area of financial stocks. You know, the loosening of the liquidity requirements coming in from Basel will loosen this week, which is encouraging some pragmatism on that score. So I think that's another some cause for some confidence.
And for people looking to make some money, so what would your pointers?
Well, I think the US dollar, as I say, over a medium-term horizon. I like the US dollar. I also like the idea of steepeners in the US dollar curve for the same reason. I think you may have better levels to get into that, as there is some fear as the fiscal cliff and debt ceiling negotiations go through their paces in the next 6-7 weeks. So you may have a better entry point. But I think, so 10-year Treasury is 1.88% this morning, and we could be, I think, headed towards 3 by the end of the year. So that's a steepening opportunity.
And still short on yen.
Yeah, short on yen. Don't get your hopes up before April, but beyond April, I can see the yen weakening further towards 100 over the course of the year. Yeah.
And just to go back to the eurozone, as you say, things are now back in the box. We yet to see what's going to happen with Spain, but how do you feel about the euro?
I feel that we now have got a very good idea of the huge political will there is to make this thing survive. Merkel's done